Have you heard of open banking? Quite possibly. Do you know what it is? Maybe not. Are you using it? Almost certainly. My name is Ian Hawkins. I'm the head of content here at Swoop. Open banking really answers a big problem that SMEs have. You see, it wasn't so long ago that there were about 7 lenders in the marketplace. Today, there are hundreds, and they all have different products and services. No wonder businesses need a helping hand to find their way through this confusing world. Open banking is a system that allows financial institutions to share your data and information with each other. Stuff like your bank account type, the number of transactions you make, the things you spend money on. This information feeds into your online banking experience so that products that are right for you and are appropriate and are relevant are pushed to the front, and the ones for which you don't qualify or which are less relevant, they're pushed to the back. Open banking relies on banks and financial institutions storing data securely and sharing some of that information with each other. That's at the heart of it. That's brought in all of these digital-first banks, like these guys, Starling, Capital on Tap. There's loads more out there. Open banking allows companies to proactively tailor their products and services to help meet your needs as a customer. It also helps those companies figure out new products and services that are going to answer some of your needs. What does this look like? It looks like an app sitting on your mobile phone. There are loads of benefits. Let's just take one example, the Merchant Cash Advance, or the MCA. We bang on about this all the time because it's a fantastic product. If you don't know what this is, at Swoop we love it. The MCA is a relatively new product, and it's very simple. What happens is you agree to borrow a set of money for a set fee. You then repay that money as a percentage of each transaction that goes through your card terminal. So, the more transactions you make, the faster you pay it off. If you've got a seasonal business where it's all up and down, this is fantastic for you. The big question is trust. Can you trust open banking? Open banking is regulated by the FSA, which means they have to follow stringent rules to keep your data safe and secure. Number 2, in open banking, you only use the data that is absolutely necessary for the product or service you want to use. This is all done through a secure and encrypted digital system, and consent can be withdrawn anytime you, the customer, wants. Finally, if something does go wrong, your bank or building society is obliged to repay you any money that is wrongfully transacted. You're also protected by data protection laws and ultimately by the Financial Services Ombudsman. What does this mean for you as an SME? Well, it means that rather than going through all of these different deals and trying to find the one that works for you, we can use APIs. Those are little robots that communicate between all the different banks and all the different lenders and your bank account. And what it means is we can find product that is going to be right for you. You can do a side-by-side comparison and make sure you are always getting the best deal. Because just because your regular bank doesn't want to give you the money, it doesn't mean there isn't another lender out there who's a lot hungrier for a deal. Open banking gives you, as a small business owner, more options than ever before. In future, institutions might also be able to offer you innovative products like that MCA that will answer your needs even better than what's out there at the moment. If nothing else, open banking has given us all a lot more choice on where we put our money, how we use it, and how we spend it. Swoop uses open banking technology to help SMEs find funding across grants, equity, and borrowing. If you want some help with that, we're the people to help you. Check out swoopfunding.com.